Today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We were coming to you from the land of Lincoln, great state of Illinois, on a Thursday afternoon on the show. Thanks to being with us for this afternoon on Back Roads of Illinois. I am Cesar Delgado. I am your host for today's program. We were talking about the commodities markets and counting on the quarter ended for this week before the holidays. And John Heinberg is coming to us as well from Total Farm Marketing on Back Roads of Illinois. I had a conversation with Steve Georgie from Allendale Inc. on Brazil planting season and goals. You can listen on the Markets Club podcast for this afternoon. Otherwise, this is your rural news sponsored by AgriGold in Central Illinois. The cattle on the feed report on this afternoon from Allendale estimated at 92. 6 between 98.9. We have a quarterly hogs report as well from Allendale. The estimate for the hogs are 99.5 between 100. 1 for the quarterly hogs report. The Farm Rescue Act need to be having a vote with the Republicans, mixed with the passage of the Farm Bill. However, the Republicans say that it is not an appropriate content of this bill, but rank member John Bozeman to go ahead on the bill in Washington. We were talking about the new surworm for right now, that the borders must open to Mexican cattle on the southern border sooner than later. This is your rural news sponsored by AgriGold. We were coming back with Clayton Pope from Pope Commodity. We were talking about the grain markets for this quarter with Clayton Pope from Pope Commodity in Champaign. How are you today? And Merry Christmas.
Fine. Good to finally see a little sign of life in these markets, corn and beans anyway.
Of course. Let's begin with our discussion on the fourth quarter for this grain cycle. Our performance and the futures for this quarter.
It's been pretty brutal bean market. You know, the funds have definitely favored the short side. The market is just absolutely overrun with bearish sentiment in the bean complex because of the massive South American production that seems to be on tap. It's certainly not made yet, but it's getting later and later for a problem of any magnitude to appear, as far as Brazil beans goes, anyway. And so, as such, you've got that weighing on it. We've had, some really big crush numbers for the most part, really crushing for bean oil, which is kind of the opposite of what we've seen historically, where it seems like meal has really usually been sort of the motivating factor for crush. But as people crush for this bean oil, it just really left a glut of meal. And as meal has been driven down to contract lows, it's just really dragged the soybeans themselves with it. So you just kind of got a lot of negative factors all piling up on each other for this bean market. But the corn market has definitely had some impressive action. The funds have kind of reacquainted themselves with the long side and are very comfortable buying. They've been big buyers. I think as of last reading, they were net long something like 170,000 contracts of corn. Most people seem to think they've added to that in the last week. We'll get an update on that tomorrow afternoon, which will be through Tuesday's close. So who knows? Maybe they're long 190,000, something like that, which is really something. So I think all eyes are on the funds right now because, frankly, we don't really see a real strong fundamental reason for corn to advance a whole lot more here. But if funds want to make it happen, hey, that's fine with us.
How been the March corn on this afternoon? And the January beans? And how is the crush department for right now? Clayton.
The crush, you say? Um, well, we've seen record after record recent months. The headline numbers that came out on the last crush report just a couple of days ago looked a little negative just because it was below trade expectations. But the fact is that you had a few crush plants were down, and it was also a shorter month, the month of November, by 2 or 3 days compared to October or a year ago, as far as working days for the crush plants. And so that apparent weaker number was really kind of misleading. If you did it on a crush per day basis, it was still at record levels. So we're still seeing great crush, which, like I said, it's crushing for the bean oil, and it's the meal that is really kind of the problem here because obviously the more they crush, the more extra meal supplies we have sitting around, and that's really weighing on the bean market, on the whole bean complex.
Clayton, how much more of demand for beans to China?
Well, that's kind of the $1 million question right
Huh?
now. Our feeling is that all this tariff talk, people are kind of terrified of what's coming as far as what Trump's going to do with China and the tariffs, and he wants to slap an extra 10% on China specifically. But we'd like to think his bark is worse than his bite. China wants to do business with us, I think, and Trump doesn't want to shoot the American farmer in the foot. My guess is, our guess as a firm is that when push comes to shove, China will try to meet some middle ground with Trump and increase their bean business with us. I think everybody's anticipating the worst, and I don't think it will be that bad. China's bean demand is still okay. From looking at the market, you'd think they just absolutely dried up and not buying any beans, but that's not true. They've been buying huge quantities from Brazil, and it wouldn't take that much to, tip the scale back towards some U.S. origin beans.
What is the yields did you hear?
Oh golly, I mean, we heard an awful lot of bean yields, pushing the 80 mark. Actually, some people were even above that. So it's hard to generalize in terms of some average yield. I don't have the county numbers right in front of me, but uh, you know, the national average was fantastic, but Illinois specifically, once again, did extremely well. Like I said, you had some people north of 80, but not a whole lot up there.
Is there anything else that would you like to tell our listeners about the beans planting from Brazil?
Well, I mean, they got record acreage again. They've just had ideal weather so far in Brazil. There were some scares earlier, just very minor ones, but it's looking great. Argentina is tilting a little dry right now, and then 14-day forecast. Maybe you could generate a little concern there, but that's kind of a drop in the bucket compared to that monster crop that seems to be on tap for Brazil. So, um, what people can do. I mean, you can still get some downside protection here in this bean market. We wouldn't do it right now because we think we're trying to put in kind of an interim bottom here right now. Maybe we get a little bit of follow through on today's bounce, but barring a problem in a last minute problem in Brazil, we would be surprised if the low is in. And I think some option strategies would be in order where a person could buy a put in the November contract and sell a call above it, and that way gives themselves downside protection, and we've been doing that all along here. And I think that's still a viable strategy even at these lower prices.
Did you get the latest news on the weather in Goas and Parna?
In where? I'm sorry.
Did you get the latest news on the weather in Goas and Parna?
Well, yeah, I mean, it continues to look excellent, but like I said, Argentina is tilting a little dry, so not a reason for concern yet, but it's something to keep an eye on. With a little bit of luck, that could turn into some kind of concern, but nothing to get too excited about yet. Although, the word dryness gets everybody's attention, so maybe it can turn into something. But again, that's kind of the tail that wags the dog. The Brazil numbers down there really dwarf the Argentine numbers, so just not seeing any problem in their weather forecast.
Do you have any final thoughts or suggestions for the producer about their grain markets planning?
Well, it's going to be interesting to see the mix here. The market is definitely doing its best to, try to sell bean acres and buy corn acres, so to speak. And unless something changes dramatically in these price trends, which we don't think they're going to, uh, as bad as December corn prices are at 435, that clearly has downside risk. If you do start to see more and more people talking about abandoning bean acres and going to corn. So uh, everybody's kind of down in the dumps on the bean market, but corn's seen a pretty decent recovery. Our advice would be to try to put some protective measures on new crop corn as well.
Thanks, Clayton. You have a great Christmas.
Well, thank you very much, Cesar. You too. Take care.
This is Clayton Pope from Pope Commodity One Back Roads of Illinois. This is your open bell numbers of the commodity market sponsored by Kyle Bumstead from Allendale Incorporated. Corn futures are up for March corn on this morning at 4 to 6 cents. Soybean futures are up at 3 to 4/4 of the January beans. Wheat futures are down at 5 to 10 cents at the half for May wheat. Let's go with livestock markets for this morning. Cattle futures are down at 6 to 8 cents on January contract. Feeder cattle are down at 6 to 8 cents nickel on February cattle. Lean hogs are up at 4 to 5 cents on February hogs. Crude oil are down to 5 to 10 cents per barrel. Dow Jones is dropping with 9 points since yesterday within us 500. Let's go with the cash hog markets and hogs weight from Allendale. The hog weight under 50 between 119 cash markets and 99. 8 between 108. Let's go with the Iowa cash hog markets from the Department of Agricultural Indemnities, Iowa. Iowa hogs weight is 289.1 per head at 78. 1. In southern Minnesota is 78.03 per head. Looking for the butt and bellies markets for today's cash hog markets. The butt markets is 104. 81 is slightly higher than last week. The belly markets in the range is 120. 81. This been your cash hog markets for today's cash markets on back roads of Illinois. we were joining with John Heinberg from Total Farm Marketing, and he is cheer for his Packers and the Seahawks, but the Bears is not so good. However, I will be rooting for Kansas City Chiefs and the University of Illinois in Orlando for this week. How are you today?
I'm doing well. I'm doing well. So Wisconsin always doing a little bit better when the Packers are playing well. So we're good here. Other than a little bit of snow flying today, so at least we're going to probably have a white Christmas. But
Let's talk about the sustaining in the Let's talk about the sustaining in the futures for corn and soybean futures as well. Can you tell us what is the position of today?
sure. I mean, obviously, market's got a little bit of a rebound today, and probably a combination of things coming into play. First off, we had such a strong sell-off this week in that soybean market, so we get a little bit of a bounce there. That also carried over, I think, lifted corn after yesterday's weakness. A couple of headlines out there we're watching. First on is this tax spending bill, excuse me, the spending bill that's trying to get put together here, to keep the government up and running here by the weekend. There was a plan out there. Now looks like that plan might be dead in the water as they're working on some different ideas. But one of the part of that plan was the 40B tax credit, which helps support the sustainable aviation fuel industry. And that was coming off the books on the 31st of December. And we saw a big sell-off in soybean oil, I think, tied to that lack of legislation or no follow-through plan, as well as we're missing the 45Z information for the upcoming year here from the Inflation Reduction Act that President Biden passed. So, but now with that bill kind of being dead, and then maybe that tax credit's back on the table, so that might brought a little bit of profit taking back into that soybean market, spilling back over into the corn market, just on that biofuel side. Otherwise, still good, solid week of export sales for both corn and soybeans. Good to see soybeans kind of hanging in there. I think that helped out as well today because we know those Brazilian beans are coming. That crop continues to get ramped up in terms of its estimates. I wouldn't be surprised to see some people start talking the 180 million metric ton mark. And those Brazilian beans affected by the currency move, as well as just the price of beans, are significantly cheaper than U.S. beans as we move into the spring months. So to me, rallies in the soybean market probably stay limited here. And then lastly, we got the wheat market today, which continues to break the new lows here. A very disappointing chart, even despite some of those fundamentals that are in that wheat market that could be looked at as a little bit friendly.
What is the spending bill about the 45Z? How has affected the corn futures?
Yeah, I mean, to me, it's affected both corn and soybeans, because of that impact of the possible sustainable aviation fluid or SAF in that plan. And we're just not getting the direction that we needed to see from the Biden administration. Still unclear if it's even going to show up before, we get to the January 20th inauguration. My bet is it's probably not going to. So that's actually been a bit of a deterrent here also in both these markets, just because, that biofuels industry needs those tax credits to kind of make things work. And, like I said, the possibility of the 40B plan coming off, tax credit coming off at the end of the year without any real clear direction, I think has weighed on the markets in general in terms of this time frame. So those are some headlines that we'll need to watch go forward here. Is do we get some type of guidance regarding the 2025, or do they extend the 40B tax credit, which the market really counts on to help support the biofuel industry? So definitely one of those things that'll be on the watch of the market as we go into 2025. Longest position on the net long in the last 5.5 years. So an area here with the end of the year coming, they can clean up some balance sheets, as the funds moving some money to the sidelines. We do still have cash trade looking fairly strong this week. I'm seeing 195, heard a couple of them tick higher than that. So again, we're still looking there. So we'll see if we get some reaction off of that in terms of cash trade, but didn't seem to materialize anything here today. Tomorrow we got cattle on feed report at the end of the day, so we're expecting total cattle on feed to be a touch under last year. Feed replacements also a touch under last year. That very well probably is reflective of the Mexico feeder cattle current suspension of those feeder cattle imports due to the screwworm, which will probably be getting cleaned up here hopefully after the first of the year, allowing those cattle to flow back in. So spilling over into the feeder cattle market, similar type action. Strong technical selling today, pushing over $3 lower in some of the deferred contracts. You get a chart today that's basically hanging on to support, but wouldn't surprise me we see another $4 or $5 move down to a key trend line that's down around the 245 or 248, 250 area. So it wouldn't shock me we see some type of move. Feeder cattle can move in pretty big jumps just because of the lack of the players in the market. Again, probably just feels like some squaring up on positions before we get into the end of the year, even though the cash feeder market and things of that nature are still relatively strong. So pullbacks might be opportunities to build some length into the cattle market going into the spring. Something I'm going to be watching for. Lastly, hog market today. Got some pretty good fundamentals going on in the hog market, at least in terms of the cash index and retail values. But again, we got a market that's sitting on a record long position by the funds. I mean, we're talking 30 to 40,000 contracts over the previous record. Charts look a little bit cautious. Feels like that February contract could break back a handful of dollars, maybe back down to the $80 area before it finds some support just on the technical side here. But then again, I'm watching those deferreds, June, July hogs. If we get back under the dollar level, maybe into the low or the mid to upper 90s, that might be a window to get some ownership or get some length in the hogs going into the summer because some of those fundamentals are still pretty supportive.
How is the box's choices for this week,
Yeah,
John?
Yeah, we had a really nice jump in the choice carcasses today. Just again, maybe that's some, holiday trade or just locking in supplies as we get past, through into the Christmas holiday because obviously sales are going to be kind of choppy with the break and the days off. Nice move today, 680 higher on the choice carcasses, back to 321. Looking at that beef rib again, that's such a driver of price. Nice move higher off of its most recent drop back. But again, like I said, the cattle market took good news and didn't do anything with it. So it tells me that there's a little bit more than just, the fundamentals here is probably again some money flow leading that market out, but still very good value in terms of the box beef market out there. The consumer, or at least the demand for beef at this point, still stays strong, but that is still something I'm going to watch very, very closely as we get into 2025 and where the consumer is, that U.S. consumer is in terms of buying U.S. beef.
Is there anything else that would you like to tell the difference between last year and this year for the corn crop in Brazil?
The corn crop in Brazil again, that's really more of a second half of the, into the summer story. But we're already starting to see some chatter out there that the planted area will be on the increase. Originally, it was thought to be fairly steady, maybe even down from last year. But with the current move in the currency, as well as the move in corn prices here overall on the global side of things in the futures market, there's a little more meat on the bone for the Brazilian producer to go ahead and push some more corn acres in. So that's something we'll have to watch. How big does that planted area get? We're seeing some numbers in terms of estimates for that crop moving a slightly higher at this time frame. Now, with that being said, U.S. is still the best value in town, probably until that June, July window. And then we'll start seeing some of the export competition from Argentina as well as Brazil step into the marketplace. So that could at least help the corn market stay supported here for the next handful of months. At least in that regard, there's other factors I think could weigh on the corn market, producer selling, things of that nature. But right now, the weather still looks extremely friendly in Brazil to get this first crop of soybeans and first crop of corn, which is more used internally, not put into the export market. And get that second crop of corn, which is that key exportable corn, into the ground and off to a good start.
Do you have any final thoughts or recap of our conversation about the summary of the quarter and the futures?
Again, next few weeks here going into the first year could be extremely volatile. Trade starts thinning out. Sometimes if a market gets moving, we don't see a whole lot of people to step in front of it per se, so that's something we got to kind of keep an eye on. look at the positions in the marketplace. Long corn right now. There's short soybeans right now. Is this a window they square some of those positions up? Already talked about that in terms of the cattle market and the hog market, with a lot of length there that they could square those positions up and see some pressure in the marketplace. Then we'll get to 2025 and kind of figure it out. Obviously, we got to deal with a new president coming on board, probably a definite change in policy coming at us here. So the market, might be starting to position itself for thinking about the inauguration on the 20th and President Trump taking over. So, when there's value on the board, I tell producers right now, just, I know it's not great value, but there's some value. Make sure we're looking at protecting that value. Keep your bushels, keep your animals open to the upside in terms of cash markets or prices running higher if things do decide to go that way. But the next basically 6-8 weeks, maybe even into the 1st of February, could be fairly interesting as we're trying to see what the new path is going to be in terms of policy here in the United States.
Thanks, John. You have a great Christmas and go Kansas City Chiefs.
Kind of hopping on the bandwagon there a little. At least it's not the Lions anyway, or the Vikings. So with that, have a great Christmas, Cesar, and everyone out there listening. And we'll be talking to you hopefully again soon. Have a great holiday.
This is John Heinberg from Total Farm Marketing, One Back Roads. March feeder cattle dollar minus 2.800, closing at $254.575. February live cattle dollar minus 1.775, closing at $183.550. February lean hogs dollar dash 0.75, closing at $183.625. March corn plus 3 single quote for closing at $4.40 single quote 6. March soybeans plus 13 single quote 2 closing at $9.66 single quote 4. March Chicago wheat minus 9 single quote 0 closing at $5.32 single quote 2. March KC wheat minus 5 single quote 4 closing at $5.43 single quote 2. Closing quotes provided by Kyle R. Bumstead Branch Office Manager Erickson, Nebraska 308-708-7340. Important. Thanks to our friends from Allendale Inc. Thanks for the guests. We're running a lot of time, but you can listen to our show on YouTube and whenever you get your podcast. This been Back Roads of Illinois. I am Cesar Delgado. Have a good day.